YouTube, what's going on? This is TerrenceRe talking to you today about the next big short or the next big long. I'm gonna go over what the market's doing right now, some trade ideas, let you into my mind, do a little technical analysis. We're gonna get right to it right after this bumper. Let's get right to it. We got the S&P 500 right now. The futures are down about 30 handles. The NASDAQ futures are down over 2% right now, about 386 handles. The Dow is actually up. I would call it flat, but the hang up about 45 handles. You got the Russell futures down about 38 handles. Remember, I told you guys, I said, when you see the Russell down, you see the small to mid caps, see the mid caps down. The rest of the market normally follows, but I watch for the Russell first. So why did I say the next big short or the next big long? Right? It's because I seen something that I would like to call harmonic pattern. Right? I see it. I actually see it in the Qs, which is the ETF of the Nasdaq. It's in Tesla. And so basically all of the big tech, and the news is even bad. So we're gonna get to it. Let's read what first of all, let's talk about what Goldman and Sachs had to say on. Let's pull up Apple. That way you can see Apple's been carrying the market for the most part. So this came out today. This news actually just hit my little feed about 3:15. I was already going to do the video, but then this came out just to support what I was going to do. So it says, just 5 stocks. Now this is from Goldman. Just 5 stocks from Microsoft, just 5 stocks, Microsoft, Alphabet, Google, Apple, Nvidia, Tesla contributed over a third of the S&P 500 index's 26% total return for 2021 through December 9th. According to analysts at Goldman, and from the end of April through December 9th, they contributed 51% of the index's 13% return. Says, moreover, only 25 stocks accounted for 58% of the index's gain. So basically, it's just telling you that like I said I got a previous video where I talked about tech. The majority of the market, the reason why the market is going up is because of tech. Tech is concentrated. Let me bring up the see if we can get the chart up. So basically, the majority of investors are invested in one thing. They're all invested in tech. Or you see a large concentration of money, of flow going through these top stocks. The analysts led by David Costin pointed out that market breadth has narrowed substantially over the past several months. In other words, investors have concentrated more of their money and risk in the largest tech companies by market capitalization. So it's not like the whole, if we go through a lot of these stocks here, I'm just going to pull one up. AT&T, look at it, down. If you click on a lot of these stocks that's in the S&P 500, you're going to see that a lot of them are down. You can even look at Netflix down off of its highs, right? And I talked about this in my last video. I got Tesla going down. I got Netflix going down even further. This is the time you really wanted to already have your hedges on, but the market is actually giving you an opportunity to get short. And that's what I'm going to talk about. Let's get right to it, man. I want to pull up the Qs, and then we're going to talk. Now, looking at the Qs right here, why is my Upwork up? I don't need that up right now. All right. So let's go. Let's look at, you see this right here. And I show this all the time. It may be easier for me to go. I'm gonna go there in a minute. I'm gonna pull up my trading view, and I'm gonna show you the pattern. You see how we got up here? Like we had a high, a pullback, and then a high. And then we got a low. It didn't create a lower low, but we got a low, we got a pullback to a high, and then we got a lower low. Took out this and this, right? So once you do that, you throw your fibs on. It came right to the 618, right there to it, and then broke this low. At that point, we can see any of these levels right here. Now, this is the NASDAQ. This is the ETF, the triple Qs, right? So it already hit one level. Look, you got one level hit. Boom, you got 2 wicks right there. Pull back. Now here we go. The big down day today. Here's the next level, right? Here's the next level after that. Now, I'm not talking about, here's the next level after that. 320 before I even look at, I could see it hitting this level. This isn't even, now you could come in here and you can do, sell call spreads in here, buy put spreads. You can do those things. I'm actually not short the Qs in particular. I am short Google. I would like to see Google break out of this range. So I'm actually down on this position. But if it comes down to hit this mark right here, then I'll take profit. I'll be fine. I have a put spread there. But what I really, really, really wanted to get into today is Tesla. Tesla. Look at Tesla has the harmonic pattern that I'm talking about. And it started with Elon Musk. Elon Musk started the selling in Tesla. When he started selling his shares, and I had took notes on this, but I never got around to doing the video, right? So, he and Elizabeth Warren had been going back and forth about the taxes and whatnot. And he's actually going to pay a large tax bill, right? Because he had to close out option contracts that he was holding that are going to expire in August of next year. And so then he'll have to pay taxes on the profits from closing out those, what they call capital gains, right? So, but he's going to pay a large tax bill. So they're going back and forth. I got notes on it. It's not really a big deal. It's a lot of money. He's going to make a lot of money, but he's going to pay a lot of money out in taxes. I think that what it came down to, he's going to pay the largest tax bill, I think, in the history of this country. So it's not like but he's also going to he made massive profits. So it's just the system. It's not like you can't blame him, blame the system. And he's paying the taxes because he's closing the position. But look at this right here. We got the same thing. Remember, I showed you on the Qs. I showed you the same thing. We got a low, we got a pullback. It's in my sweet zone right here. Then it took out this low, right? But it didn't come down that far. It went all the way back up into here, where the gap is. And then you got a low, then you got a high, and another low. Generally what you look for. Now, here we go. Now I'm getting ready to go to, let's see. I'm getting ready to go to Trading View because I need Trading View to be able to show you this. No, I'm not upgrading because I don't use it that often, but in order to show you what I want to show you, I got to come here to do it. And I need to share this screen. Just bear with me. I'm telling you, you guys going to like this. Where are you at? I want to share video file. Which one? I hate this. Let's see. We're going to just bear with me. Stop this one so y'all can look at me. And then I'm going to come right back to share. I don't know why I keep doing that. I'm working with StreamYard. I like StreamYard a little bit better than OBS. But sometimes when you're trying to do stuff, and you're trying to show your other screen, it ain't doing like I want it to do. And I can't get it over there. All right. Let's show the entire screen. Share. Bam, there we go. Now we're cooking with grease. My dad would say we're cooking with grease now. All right. What I got pulled up right here is Tesla. Now I'm getting ready to draw a harmonic pattern, and I'm gonna show you these you don't see these all the time in markets. Most of the time when you see these harmonic patterns, you see them in corrections, either at the end of the end of a down move, sometimes you get them, or the end of an up move, you'll get them. And it's kind of like letting you know that the market is getting ready to turn. So let's see. I'm gonna click over here, and you can watch me do this. I'm looking for, um, here we go, right here. You can see I don't do it that often, just because I don't use this platform. I don't need that. I don't need that. Here, that's what I need. You come from the top. I'm gonna come from here, cut my magnet on, so it's on. So we're gonna come from here, from this point, from X, A, B, C, and then D. That's what you look for. And you see that? That's what, like a double top, or what you would call, move this out the way. Like a double, so you got your double top, but it's like a double, it's like a M. You look at it, so, and I think this one will be classified as, come on, it's still drawing them. I don't need to draw it again. Delete, remove. All right. When you see these in the market, or at highs or at lows, it generally is letting you know that you're going to get a correction. Now, sometimes you get these and you don't get the correction, right? So what you would say, well, how would you know? Like a lot of guys that do harmonics all the time, you look for a violent move at the end of the move, right? You look for another move from off of this level right here. And we got that. You got your down, your retracement, and then boom, boom, you got your bear flag. That's your bear flag right there off of the move. So you would come right here, just off of that bear flag, and then throw your fibs on. Right here. You come right here, boom, boom, boom. Now what? That's it. That's it right there. Lock that in. Come on, man. I don't need, just take this off. This is why I don't use it that often. But there you go. I just can't draw these patterns on Thinkorswim. There you go. So you got your harmonic pattern, boom, boom, boom. And then you got your A, or your 1, 2, 3. Took out the low. That's your flag right there. And look at it today. You got a big red candle. Look at it. So now, when you see something like that, now look, I understand that Tesla, that Elon Musk is, he the man of the year, man of the decade, or whatever. I don't care anything about any of that. It isn't personal. Like, it's not like I hate Tesla or any, I look for stuff. If I would have seen this in any other stock, this just so happened to be Tesla, and it goes with my what I'm looking at in the Qs, what I'm looking at in Google. Netflix is down, so tech is down. So a big part of this is tech. So then you can couple this with geopolitical news as well. We got risk over there. We got risk. The United States has risk. You could look at Tesla with China right now, and Apple in China, the United States and China. There's a lot. It's a lot of our tech is dependent upon China, our chips and things of that nature. And so right now you got, and also with Russia, you have Russia on the border of Ukraine, right? If Russia was to invade Ukraine, then what? What would the NATO nations do? What would the United States do? China, if China was to then invade Taiwan. These are the things that are being talked about, and that's the chatter that's going on right now. So now that I showed you, now once I put that on, now I'm not saying that it's going all the way down here to 130 bucks, right? I'm not saying that it's not either. I'm just saying that that's where we got it projected going to hitting any of these targets on the way down, right? So what did I do? I came out and I started buying puts. I'm not even going to lie to you about it. I started buying puts. Now let's go to the option chain, and then I'm going to show you the option chain, and I'll show you where I'm at. And I bought puts in 2 different accounts. So we're going to stop this one. I don't need this anymore. I can drop this. And then we're going to bring back up. Boom. And you can see I got it drawn out over here as well. Now let's go to the option chain, because this is where it gets juicy, because you can see what other traders are doing as well. You can hear me say it. I'm going to go out 400 days, January of 2023. Do you all see these puts out here people are buying? You can come all the way out here. Now remember, the final place that I had marked on that screen was like 130. Do you see this? Let me see. You guys see this? It's 24,000 puts out here. Now they could be selling them. They could be selling puts, but once again, why would you come out here and sell these puts a year out in time for $1.22 in premium? I mean, even if it collapses, you might make 50 bucks, 60, 70 bucks on it. To me, it don't make no sense to go that far out in time and sell the puts. If you were going to sell the puts, you come in here, maybe like 92 days. I'd come 64 days, to be honest with you. And if I was going to sell puts, I'd come out here all the way to like maybe sell this 10 Delta. You can get these for 15 bucks, right? That's $1,500. So that would be a better play to me, short term, and that could collapse at any time, the volatility on them. But to come out here, right now, I'm gonna show you something. I got another portfolio. You see, 27 of these at $20 was bought today. 20 of those are mine. I bought 20 of these right here, and they cheap. I bought them for like $5. So you say, well, why buy? It's cost me $100, right? I'm going to tell you guys, it's the best lottery ticket you can have. Now, I'm not a financial advisor. This is your own risk if you take these. You own it. You buy 20 of these for $5 a piece, right? Because you see the ask is 6, the bid is 3. You can probably come in here and get them for 4 or 5 cents. Maybe even 6, right? But no more than 6 cents. You buy 20 of them. You say, well, why buy it? You think it's going to go to 20? Probably not, right? That's not the point. But can it go down $100? Yeah. Can it go down $200? Let's say Tesla dropped $200 from 926 to 726. All I did was move the chain down $200. You see that? Now you're looking at the price from $3.50 to $5. So let's just say $4 for 20 of them. $400 for 20. That's pretty sweet right there, ain't it? You just bought. So you ain't got to hold it till it gets all the way to 20. If it was to start tanking, the volatility has already increased today because it's down 5%, and it will continue to increase. And so as it moves in price, and you got a whole year to hold on to those. Do you know that? Let's just say you get lucky and let's say Tesla was to drop about 500 points. Now look at this. You're looking at about $5,000 on it. Now it may not explode that much, but it could explode all the way up to like $3,000, $2,000, and you got 20 of them, and it costs you $100. So if I'm wrong, I just lose $100. So what? That's worth the risk. That's worth the risk. Now I also will show you where I'm at. Now in this particular account, I bought some 92 days out, a little bit more realistic. And I'm right down here at 160. I totally think that it could do that in the next 3 months, the next 2 months, because I'm pretty confident in what I see. And like once again, I do not have to hold this till it gets to 160. It can drop a couple hundred points, and those will be worth $1. And I paid, like, if you look down at the bottom, you see trade price. I bought 2 of them for like 23 cents. Little cheap shot. You know, those little puts could turn into $500 easily. I'll be out of them. That's a quick little easy grand into my little day trading account. Now, I do have on that same one that's out 400 days, about 20 of these. I came down, I believe, because I did it in another account. I think I did no, I didn't do the 120s. I came down right here at 160, and I paid about $200. I paid like 2 something for right here at 160. See these 5 right here? Those are mine. You can look at the volume. We got 5 right there. That's me. I got a 1% chance, just about, basically, that's what that delta means, of it getting there in the next year or so. But if it does, if I'm right, and these become in the money, these options right now in the money are going for $24,000. That's $24,700. So I got 5 of those right there. So I just want to say this is where, remember, I don't know if Michael Burry, if you Google Michael Burry shorting Tesla, he's been short Tesla for the longest. And I think he closed out his short positions recently. Maybe he was too early. He was too early and couldn't hold them. And that's what I think, like when you trade really, really large. So I'm trading small enough and taking these shots. These are straight lottery tickets. Make no bones about it. But I'm trading so cheap for me that if it doesn't pan out, I'm cool with it. I'll take the same shot next month. These options though, I got 400 days to be right on these. On the ones that I have in my Fidelity account, which is this one, the ones that I'm showing you out here, these leaps, that's what these are basically. That I told you I got out here, I got 400 days. In this account, I just bought these. I got 92 days. I need these to work within probably the next 60 days to make some money on them. I'm not gonna hold them past. I'm not gonna hold them past 20, 22 days, 20, 21 days. Once they get down to 21 days, I'll burn them, right? But I ain't pay that much for them, so they probably wouldn't be worth nothing anyway. I'm just gonna hold these for probably like 100% loss, but I only paid 23 cents for 2 of them. And I may look to buy some more if the market goes up some, because then they'll get cheaper, and then I'll buy back in and buy some more. So basically, I just wanted to show you guys. Look at my previous video where I talked about Tesla and Netflix. I showed you the down moves. Look at this. This ain't over. Netflix ain't over. I'm telling you right now, Netflix, you may get a pop though. You might get a little bounce up into here. It may pull back up into here, and then it's gonna keep going. Next level is right there. Look at it. So if you sitting in and you hodling in Netflix, I would advise to maybe put on some protection. You can do some I will wait for a rally though to put that protection on. I wouldn't get short into this hole just yet. Google is like a dam waiting to break. It's like a dam waiting to break. I mean, Google is right there. I can show you this. I'll pull this up right here. Look at Google. It's ready. Look at that trend line right there, up at the top. It's ready. It just keep coming right there and testing it. It just keep coming right here and testing it. When it do break out of here, it's gonna run away. And so I'm already short. I got a put spread in there. I need that one to work though. And that's pretty much it, guys. I just wanted to come in. I know I titled the video "The Next Big Short" or "Big Short" or "Big Long." And I don't see anything long about any of this. Now it could, who knows? But I don't see it. I don't see it at all. But the good thing is you can make money when the market goes down. And that's a lot, these videos I've been doing lately, I've been showing you different strategies on how to make money when the market goes down. You don't just have to just sit there and take it, um, and just hold out. So hit the like button, hit the subscribe button, share this video. Um, I give trade ideas all the time. I show you some of the positions that I put on. And today I even went over harmonics. But, if you guys want to know a little bit more about those, you know, um, you got to have a certain platform to be able to, you can't do them on Thinkorswim. Well, I think Thinkorswim, you can pay for a package from somebody to put it on there, and all of that. You don't really need to see the colors. I can see it without doing that. I just did it today, so it would be easier for you guys to see it. But I hope you guys enjoyed it. And with that, I'm out. Peace.